right, so we'll officially kick off now. So again, thank you everybody for joining today. For those that I haven't had the pleasure of meeting, my name is Christine Matricarth, and I am the Managing Director for the Art Secretariat housed here at Winrock International. I am pleased to say that I've been with the team for a little over 3.5 years now. So basically since we began this process, it's been an exciting journey. All right, so in the interest of time, I'm not going to spend a lot of time on the background of why forests are critical to combating climate change or all the co-benefits that they offer. I will say that for forests to deliver on the massive climate change impact potential that they have, we need to mobilize billions of dollars of additional annual investment from all sources, including the private sector. But private capital flows through markets, and markets need standardization so that REDD+ credits are comparable across jurisdictions and fungible with emissions reductions from other sectors. In order to attract this private capital at scale, market participants need to have confidence in the integrity of the results. In a nutshell, that's why we created ART. We want to serve as a global quality benchmark for REDD+, providing confidence needed in the integrity of forest emissions reductions and removals to unlock finance at scale for ambitious climate action to protect and restore forests and to incentivize governments to achieve these results. Our architecture was also designed to enhance confidence. ART is a standalone program independent of governments or donor countries with standardized procedures that apply to all participants. We have a transparent and inclusive process governed by globally recognized experts and operated by an independent secretariat supported by expert technical committees. I wanted to highlight our board for a moment. So the ART board provides strategic guidance and ensures the program's environmental and social integrity. We are very fortunate to have a board comprised of such leaders in this field. You're representing safeguards experts, technical experts, and people that have been working in this field for a very long time. We have 6 immutable principles that guide ART in the development of our standard trees. Again, in the interest of time, I'm not going to read each one of these to you, but you'll see how they've been operationalized throughout the standard. I would like to touch on 2 briefly, however. The first principle is what drives ART's desire to ensure a pathway for incentivizing action for countries at all points along the deforestation curve. It is not sufficient to provide incentives only for one portion, as meaningful long-term change will not occur as a result. Our standard includes distinct crediting level approaches for reducing emissions from deforestation and degradation, restoring forests, and for taking the ongoing actions needed to maintain the forests. The other principle I'd like to highlight is the second one. So we ensure consistency with UNFCCC decisions, but this does not mean that we can't go beyond them. We actually have more specific requirements around eligibility, establishing crediting levels, and calculating emissions reductions in order to be transparent and create fungible emission reductions. So one of the questions I was asked to cover in this presentation was around the process that ART uses and who does what. I thought it might be simplest to walk through the process briefly to explain. This is also included in the tree standard and has more details on each step there. But in general, a participant first submits their tree's concept, which includes basic preliminary information and essentially serves as an expression of interest. The Secretariat reviews the document for completeness and eligibility, but we do not validate or verify the information provided. Once a concept is approved, it is posted on the ART registry and available for view by the public. Next, the participant will prepare its trees registration document and the trees monitoring report. These include the detailed information regarding the program's eligibility, crediting level, reported emissions, and safeguards. The ART Secretariat reviews these documents for completeness and readiness to undergo validation and verification. Once complete, these are also posted on the ART registry, and notification is sent soliciting public comments on the documents. Posting of the documents in the registry does not indicate that the Secretariat has assessed the content or verified any of the statements to be accurate or in conformance with the requirement of trees. Rather, it is an indication that the documents are complete and ready to undergo our rigorous audit process. The participant is then ready to contract directly with an ART-approved validation and verification body, or a VVB, and begin the audit process. The VBBs follow the requirements of the trees validation and verification standard to conduct their work with oversight from both the Art Secretariat and their accreditation body. We'll discuss VBB approval and oversight more later on in the presentation. Once the validation and verification reports are approved and finalized, the Art Board reviews all of the material and has the opportunity to ask questions or seek additional information. Following Art Board approval, the credits are then ready to be issued after the participant pays their issuance fee. Art is not involved in any transactions or in negotiation of the terms for ERPAs. So now focusing on our standard. Our standard is called TREES, which stands for the REDD+ Environmental Excellence Standard. It's based on a decade of learning and the evolution of REDD+. So as you're aware, donor governments have made significant investments over the past decade in pilot programs to transition REDD+ to a jurisdictional scale, including bilateral agreements with forest countries and multilateral investments through programs like REDD Early Movers, the World Bank Carbon Fund's Forest Carbon Partnership Facility, and the Green Climate Fund. These programs have helped to build capacity in forest countries and test scientific approaches for quantification and monitoring, but they were not designed to attract private capital at scale. As we were developing ART, we were able to consciously build on this base of experience to create a crediting program that is fully aligned with the requirements in the Paris Agreement and incorporates the necessary market elements that enhance confidence in results. This allows for trees credits to be fungible with credits from other sectors and to attract the finance needed to protect and restore forests globally. When TREES 1.0 was published in February 2020, the focus was on reducing emissions from deforestation and forest degradation. At that time, ART communicated that the next version of TREES would expand to credit restoration of forests and protecting forests, thereby offering incentives for participants to engage in a wider variety of activities. TREES 2.0 was developed throughout 2020 and underwent 2 public consultation processes last year. After careful consideration of all comments by the Art Board, TREES 2.0 was published in August 2021. And I should give special note to the awesomeness of our board because they had 8 different meetings specifically to review the public comments and debate them and ensure that decisions made were in line with the best information possible. So we greatly appreciated their dedication to the process. The updates for TREES 2.0 broaden options in 3 key areas. So first, we expanded the crediting for forest restoration and the establishment of new forests. This is the first time that a jurisdictional program has established a separate crediting approach for removals. We also added an innovative crediting approach for jurisdictions that have high forest cover and low levels of deforestation, or HFLD jurisdictions. They typically don't earn a lot of credits for reducing deforestation because their deforestation rates are so low. The new approach in TREES aims to incentivize continued low deforestation, creating a more effective and equitable global system for forest protection. We also provide a pathway for the contributions of Indigenous peoples' territories to aggregate as subnational accounting areas as part of a national submission to ART. These subnational Indigenous peoples' territories are eligible to qualify as HFLD and therefore may elect to use the HFLD crediting approach to better reflect their historical performance in protecting their forests. Some additional updates we included were improving the requirements around uncertainty, clarifying provisions to avoid double counting, and clarifying the flexibility of how project level activities can fit within a jurisdictional crediting approach or nest under TREES. So eligibility under TREES. A key requirement of TREES is that participants using TREES must be national governments or a subnational government with national government approval. A national government may register either its entire national accounting area or a subnational accounting area. Subnational accounting areas must meet a minimum of 2.5 million hectares of forest. It is important to note that there is no scale threshold for countries registering a national accounting area. Countries smaller than 2.5 million hectares of forest are indeed eligible to participate. The boundaries of subnational accounting areas shall correspond with no more than 1 level down from national level and or 1 or more Indigenous peoples' territories. If a national government is registering a subnational accounting area, which includes multiple jurisdictions and/or IP territories, they do not need to be contiguous. The registration of subnational accounting areas that meet these eligibility requirements is only allowed until December 31st, 2030, at which time all participants must transition to national accounting. So a subnational government, again defined as no more than one administrative level down from the national level, must also meet the tree scale threshold of 2.5 million hectares of forest area. It must register its entire jurisdiction, and it must have national government approval to participate in ART. I would note that this is different than a host country letter of authorization for corresponding adjustments. This is just acknowledgement that the national government is aware and approves the subnational jurisdiction joining ART. Again, the registration of subnational accounting areas that meet the eligibility requirements is allowed until the end of 2030. So TREES offers crediting approaches for emissions reductions using the TREES crediting level, or for eligible participants, the optional HFLD crediting level. Participants whose HFLD score exceed the minimum threshold may use the HFLD crediting approach. All of these things will be detailed more in the coming slides. We also offer an optional approach for crediting removals from forest restoration and the establishment of new forests. Only participants who have reduced their deforestation and degradation emissions below their TREES crediting level are eligible to use this approach for crediting removals. Again, we'll dive into the details of the removals approach shortly. Regardless of the approach used, each crediting period is 5 years in length. Following the initial crediting period, a new crediting level must be calculated using an average of the prior 5 years of emissions. The crediting level may never increase over time. In instances where appropriate data is available, the crediting period may begin up to 4 years prior to the date the participant submits its initial documentation to ART. At a high level, this is how the emissions reductions are calculated. So once a participant has determined the crediting level, they subtract their annual emissions as monitored and reported in TREES, subtract the required buffer pool contribution to compensate for reversals, adjust for uncertainty, and in cases where the accounting area is subnational, they must take a standardized deduction for leakage. We'll again cover each of these on individual slides. The emission reductions and supporting data, documentation, and calculations are then independently verified for conformance against TREES. Once the ART board has approved, the Secretariat then issues serialized TREES credits to the country or jurisdiction in its registry account. Any credits issued under the HFLD crediting approach will be labeled as HFLD in the registry. Removals credits are calculated in much the same way. First, determine the area of removals activities that exceed the removals crediting level and multiply that by the appropriate removals factors. And then just as with the emissions reductions, the required buffer pool contribution is subtracted, adjustments are made for uncertainty, and the standardized deductions are taken for leakage if the accounting area is subnational. Removals are also independently verified, and again, when approved by the ART board, the Secretariat will issue serialized credits. Removals credits are also labeled as such in the ART registry, so it's very transparent which crediting approach is being used. So diving another level deep, the TREES crediting level, the first of the 3 crediting approaches. This is established by calculating the historical average of emissions from deforestation and forest degradation for the 5-year period that ends directly prior to the start of the crediting period. The TREES crediting level is valid for 5 years, or the length of the crediting period. It must be recalculated at the beginning of each crediting period and cannot increase. To qualify for using the HFLD crediting approach, jurisdictions must first determine if they meet the TREES HFLD threshold by calculating their TREES HFLD score. The score takes into consideration 2 unique qualities of HFLDs, specifically the percent forest cover and the deforestation rate. If the jurisdiction's HFLD score exceeds the threshold of 0.5, the jurisdiction is considered HFLD under ART and may use the optional HFLD crediting approach. The score is calculated for the accounting area being monitored, so it may be applied to the national or subnational accounting areas. Jurisdictions that qualify as HFLD, as previously described, are eligible to use this crediting approach. The HFLD crediting level is established by first calculating, by first calculating the historical average of emissions from deforestation and forest degradation for the 5-year period that ends directly prior to the start of the crediting period. This 5-year average of emissions is added to a figure that is composed of 2 factors that recognize the characteristics of HFLD jurisdictions: the HFLD score and a carbon stock percent, which is 0.05% of the carbon stock of trees in the standing forest. HFLD participants may optionally calculate the foregone removals, which is a sequestration associated with the forest remaining forest in areas that would have been deforested in the absence of their RED activities. Finally, HFLD participants may be subject to a deduction if their annual emissions exceed their 5-year historical average by more than 15%. A sliding scale deduction is applied based on the amount the annual emissions exceed the historical average. Participants that demonstrate that emissions from deforestation and degradation have been reduced below the tree's crediting level during the same year are eligible to also credit for removals. Trees allows for crediting from non-forest to forest only, and eligible areas must have been non-forest for at least 5 years prior to the start of restoration activities. To determine the removals crediting level, the participant calculates the average area in hectares of commercial planting and natural restoration during the 5-year historical reference period. If the areas of natural forest restoration and commercial planting can be tracked separately, they are treated differently, allowing all areas of natural restoration to be eligible for removals crediting by applying a 0 crediting level. Participants track any new removals areas that are planted during each year of the crediting period. Eligible areas above the removals crediting level area are multiplied by the appropriate removal factor, which must take into account forest type, age, mortality, and any other parameters that influence biomass accumulation. Participants may also include areas of natural restoration which were initiated up to 10 years prior to the start of the crediting period. However, only the incremental growth that occurs during the crediting period from these areas may be included. Additionality. So common project scale additionality tests such as regulatory additionality or barrier tests or financial additionality are not appropriate for jurisdictional programs. Therefore, similar to other jurisdictional programs, trees employs performance threshold approaches. Additionality for participants using the trees crediting level and the trees removals crediting level uses a performance-based approach in that only emissions achieved below a conservative historical crediting level and removals achieved any year above the historical crediting level are eligible for crediting. In this way, additionality will be ensured by only issuing trees credits that are below historical forest emissions and in excess of historical removals. Only reported emissions reductions and removals that are verifiably better than the trees or removals crediting level will be eligible for receiving trees credits. For HFLD jurisdictions, the HFLD score provides the performance threshold in that jurisdictions must achieve an HFLD score of 0.5 for each year of the reference period in order to be designated as HFLD. Therefore, a positive list additionality test is appropriate for this crediting approach. The Statement of Reasons for Trees 2.0 outlines the large body of literature documenting the current and projected increased pressures on intact forests. HFLD jurisdictions must continue to actively mitigate threats in order to maintain their high forest cover and low deforestation rates reflected in the HFLD score threshold. It's important to note that all participants, regardless of the crediting approach used, are required to provide a RED+ implementation plan in the initial trees registration document and each trees monitoring report. This plan must outline the new and ongoing RED+ activities implemented as part of their program, including defining where the activities are occurring. This requirement ensures that participants transparently identify the activities implemented as part of their RED+ program. Trees 2.0 includes a revised approach for calculating uncertainty, which focuses on the combined uncertainty of the calculated emissions reductions and removals value rather than separate estimates for the crediting level and annual emissions value. To develop this new approach, we worked with a RED+ expert who authored a paper that lays out a practical way of reducing the risk of overestimation that would be considered intolerable by market stakeholders. So rather than reporting and discounting for uncertainties associated with underreporting, which doesn't really affect credibility or rigor, We now apply a risk tolerance level that only considers over-reporting or overestimation. This is done by applying a one-sided confidence interval and requiring conservative discounting based on a risk tolerance of over-reporting. The risk tolerance level we used was recommended as it is conservative, while still allowing some flexibility for countries with higher uncertainties because we require degradation emissions to be included. We also removed the 15% allowable uncertainty threshold, which gave participants the first 15% of uncertainty free, if you will, with no deductions. We now require conservative deductions at all uncertainty levels above 0 at a sliding scale. Finally, we added a new provision which allows participants to recalculate uncertainty at 5-year intervals and recoup deductions if uncertainty has decreased over time. In this way, we'd like to incentivize ongoing improvements in monitoring and accuracy in the data reporting. For leakage, if a participant submits a subnational accounting area, a leakage assessment must be conducted. We include 4 categories for leakage based on the percentage of a nation's forest, including in the subnational accounting area, with corresponding leakage deductions ranging from 0 to 20%. If the area includes greater than 90% of the nation's forests, no deduction is required. Reversals. Trees defines a reversal to be when a participant's annual emissions exceed its crediting level. Trees requires participants to contribute a percentage of generated emissions reductions at each issuance into a program-wide buffer pool to act as insurance against future reversals. The amount of contribution is based on the risk of reversal occurring. The maximum risk rating under trees is 25%, but it can be lowered through the 3 mitigation options listed here. If a participant experiences a reversal, credits from the buffer pool will be retired to compensate for the amount of emissions associated with the reversal. The participant must then increase its contribution to the buffer pool each year by 5%. If a participant leaves ARD at any time, it forfeits all remaining buffer pool contributions. These will be immediately retired to compensate for any possible future reversals the participant may have when not being monitored under ARD. Right, so for the next few slides, I'd like to shift focus a little bit to the safeguards and go through those in more depth. So at the highest level, all REDD+ activities under trees have to be conducted in accordance with the Cancun Safeguards. The Tree Safeguards Committee recognized that this is a very broad statement, however, and additional information was needed to be able to effectively implement and report on safeguards. Based on an extensive review of current REDD+ initiatives and country summary of information reports, as well as the committee's knowledge of national level safeguard implementation, the committee unpacked the Cancun Safeguards into key thematic safeguard areas. Each theme has a structure, process, and an outcome indicator. This is intended to mirror the steps countries are using in establishing their national safeguard systems to address and respect all aspects of these Cancun safeguards. Participants may use their summary of information reports, as well as their safeguard information systems once fully implemented, to monitor and report on the safeguards under trees, although other forms of reporting are also permitted. In the first crediting period, participants must conform with all structure and process indicators. In addition, they must either conform with or provide a plan for conforming with the outcome indicators. However, conformance with all indicators must be demonstrated within 5 years of joining ARDS. As outlined in the trees validation and verification standard, the review of the safeguards elements are equally important as the review of the carbon accounting elements. One concern that I had received from your team was whether we simply accepted the governance structure a country has in place. We do not. If you review the scope for validation in the validation and verification standard, the validation and verification body not only evaluates the description provided by the participant for accuracy, but also evaluates whether the structures, processes, or monitoring plan can adequately ensure that the implementation of the REDD+ actions will be in conformance with that indicator. I would recommend that you read the entire safeguards in section 12 of the standard and our accompanying safeguards guidance document, but I wanted to provide some additional detail for each of the themes during this presentation. Again, in the interest of time, I will not actually read every theme to you, but I wanted to share some keynotes on specific ones. For safeguard A, I'd like to focus on 1.2. When a country has ratified or otherwise officially agreed to a relevant international convention, such as ILO 169, for example, the requirements of that agreement or convention must be outlined, and its requirements apply to all of other themes as noted. In some instances, a country may not have ratified an agreement, but may have adopted certain provisions in its legal framework. This would also be included. Cancun Safeguard B includes several aspects that we are often asked to explain further. So for the first one, while other themes ensure benefit sharing arrangements are developed in a fair and transparent manner, theme 2.2 here requires the distribution of REDD+ benefits related to the implementation of the REDD+ results-based actions to be carried out in a fair, transparent, and accountable manner. So this theme ensures that all benefits are distributed as agreed upon. We also often get asked of how we can ensure that governments will honor their agreements or that there's no corruption. And that is exactly what theme 2.2 is designed to allow us to audit and ensure it's being done appropriately. As described in the guidance document, theme 2.3 requires a participant to first describe procedures for the recognition, inventorying, mapping, and securing of customary and statutory land and resource tenure rights where REDD+ actions are implemented. These procedures might be directly related to REDD+, or they might be part of other applicable frameworks or policies. Then resources must be allocated to implement the procedures. And finally, the participant must demonstrate that stakeholders had access to, use of, and control over land and resources in line with their rights. This theme also specifically includes a requirement that no involuntary relocation took place without the free, prior, and informed consent of any Indigenous peoples and local communities or equivalent concerned. It should be noted that outside of the tree safeguards as well, trees has strict ownership requirements. Finally, theme 2.4 is regarding access to justice. This is a tree safeguard that requires dispute resolution mechanisms at all relevant levels and in a manner that is non-discriminatory and non-cost prohibitive. In other words, we require grievance mechanisms, but not a single one at a national level. We require them to be present at all levels where it is appropriate to actually address the issues. The outcome indicator requires evidence of the effectiveness of these processes. We deliberately call these dispute resolution mechanisms to ensure that processes outside of specific REDD+ processes are included. For example, land tenure might be litigated under a formal legal system already in place, and we want that to be brought in and to be monitored as well. Safeguard C themes seem simple to understand, but they are obviously quite important. We've actually received positive feedback for requiring transparent public documentation of the policies and processes regarding these topics, as often these are somewhat murkily defined in governments. Safeguard D themes ensure that all stakeholders, including private landowners, projects, IPLCs, and others, participate in the design, implementation, and monitoring of the REDD+ activities. The indicators require their participation at every step, including when assessing the success of programs and gathering data, providing additional opportunities for input and feedback throughout the process. We are often asked if we only provide IPLC stakeholders a voice in the initial phases of REDD planning, and that is not correct. As noted, we require evidence that all stakeholders were involved in the planning, coordination, implementation, and even evaluation of the REDD+ activities. While an important safeguard in general, this also helps ensure the sustainability and long-term success of the REDD+ program. For Safeguard E, I'd like to highlight the last theme. Trees requires participants to go beyond no net harm and identify priorities for the enhancement of social and environmental benefits for which the planned REDD+ actions can contribute. For example, links could be drawn between REDD+ activities and a country's sustainability or sustainable development goals. Safeguards F and G tie to other sections of the standards and require participants to assess the risks of reversals and leakage and to take appropriate mitigation actions. We do often get asked whether we require leakage and reversal mitigation plans, and the answer is yes, we do, under theme 6.1 and theme 7.1. Validation and verification. The tree standard requires validation to occur after year 1 of each 5-year crediting period and verification to occur after years 1, 3, and 5 of each crediting period. Verification is optional after years 2 and 4 of the crediting period. However, no credits will be issued without verification. All validations and verifications are conducted in accordance with the tree's validation and verification standard, which is on our website. Validation and verification bodies will be required to be accredited by an international accreditation forum organization and to submit an application to be an approved VVB under ART. The application focuses on whether the VVB has the appropriate competencies and resources to perform validations and verifications for ART programs. While the Secretariat will oversee the approval of VVBs to perform validations and verifications, each participant will oversee the request for bids and the selection of the VVB it wishes to use. In addition, the VVB will contract directly with the participant. A conflict of interest assessment is required prior to work beginning and is approved by the Secretariat to ensure objective third-party audits. The Secretariat will conduct initial and ongoing training for VVBs and will hold periodic meetings to discuss verification issues that emerge to ensure consistency of interpretation and implementation across all VVBs. In addition, the Secretariat provides oversight of the VVBs during the audit process and reviews the final reports. In addition, the International Accreditation Forum organization also provides annual surveillance audits and ensures that the VVB is conducting its activities appropriately. Double counting. In TREES 2.0, the double counting requirements were clarified regarding how TREES addresses the avoidance of double claiming. The updates recognize that international requirements for corresponding adjustments to avoid double counting under the Paris Agreement Article 6 were not quite out yet. I am pleased to say that when we wrote the TREES 2.0 double counting provisions, we did actually manage to mirror what the final Article 6 agreements were, so we did not need to have them changed. We do acknowledge, though, that the infrastructure for countries to account for corresponding adjustments is not yet in place. And as such, there's going to be a transition period for the Paris Agreement rules and infrastructure to be operational. We also recognize that there are clear requirements for corresponding adjustments to be made in government-to-government transfers under Article 6.2 and for transfers for use in the ICAO CORSIA. Therefore, our registry already has the necessary things in place to facilitate the avoidance of double claiming for all transactions where accounting for international transfers may be required or preferred. So while voluntary carbon market transactions are not required to have a corresponding adjustment, we do have the functionality in our registry to allow those to happen if either the seller or the buyer would like it to happen. A common question we receive is whether ART allows nesting of projects in smaller scale REDD+ activities. We do. While ART does not directly credit project level activities, we recognize the important role these efforts play in implementing a national REDD+ strategy. ART does not prescribe the way that governments work with IP, local communities, or the private sector, but rather we offer flexibility for any number of approaches that best suits the individual country situations for nesting projects or having benefit allocation agreements. Any option agreed upon by the relevant parties for benefit sharing between governments and private entities, which could be communities, projects, or individual landowners, are permissible. The use of existing allocation methods and tools are permissible, or a country could build on an approach it has already developed. ART does not stipulate how this has to be done. For example, the parties could share trees credits, they could share revenues from the sale of trees credits, they might have payments for ecosystem services or other financial incentives not linked to carbon credits, or they may allow projects to register under other greenhouse gas programs subject to the requirements for double issuance under TREES Section 13. All options are subject to the requirements on double counting and double issuance, and to the safeguards requirements to ensure that any negotiations were done in line with our safeguards. A paper detailing options for nesting under ART is posted on the ART website, as is a paper focused on options for private sector involvement in REDD+ under ART, which can provide more information about the many pathways that are possible. So ART has developed an online logic-based registry system that is tailor-made to manage all of our processes and the documentation flow. The registry is managed by the ART Secretariat. Our participants must open accounts and will have login access that gives functionality, including the ability to upload trees documentations, transfer and retire emissions reductions and removals, and the selection of verifiers. The registry also includes links to public reports to enable stakeholders to see trees documentation, credit issuance, and credit status. The Secretariat issues serialized credits into country and jurisdictional registry accounts for their use in subsequent transfers or retirements.